Welcome, ladies and gentlemen. My name is Peter Yusuf. I'm the senior analyst of IronFX. Together we'll be going through a discussion about the week ahead in the FX markets and generally the financial markets. Before we start though, let me show you our risk warning and our disclaimer. And as you're reading, allow me to make a small intro. Now, the current week created considerable turbulence for the markets, with the market mood shifting, thus altering the direction of trading instruments. As for the coming week, we expect it to also be very interesting and definitely more loaded than the one we leave behind us. On the monetary front, we expect the interest rate decisions of BOC on Wednesday, as well as BOJ and ECB on Thursday. Please note that no Fed policymakers are expected to speak in the coming week ahead of the bank's November meeting, so it may be quieter from the US side. As for high-impact financial releases, they become more frequent near the end of the week, yet we still would like to note Germany's IFO indicators for October on Monday, and on Tuesday the US consumer confidence for October. On Wednesday we get Australia's CPI rates for Q3 and the US durable goods orders for September. On Thursday we note Germany's preliminary HICP rate for October, while we highlight the US GDP advanced growth rate for Q3. On Friday we note France's, Germany's and the Eurozone's preliminary GDP rates for Q3, as well as Eurozone's preliminary HICP rate for October. Moving on to the US dollar, and this would be USD Index for our chart. Note how the index has been dropping, marking lower peaks and lower lows, with a downward trend line guiding it. We tend to maintain our bearish outlook for the USD for the time being. To the downside, we would note the 93.20, which practically served as a support line and a resistance line. Lower than that would be the 92.75, which served as a support line back around the 16th to the 17th of September. And the lowest level noted would be the 92.30, which practically reversed the downward action a couple of times. That was in the period from the 3rd to the 16th of September. To the upside, we note the 93.70, higher than that the 94.10, with a beautiful resistance point right here, and even higher than 94.60. Moving now to US dollars fundamentals. Now the USD seems about to end in the reds for a second consecutive week against a number of its counterparts. On the monetary front, expectations for a tightening of the Fed's monetary policy are still present. It's characteristic how Fed Board Governor Waller stated that a more aggressive policy response may be required should inflationary pressures be maintained in the US economy. Now, some analysts tend to interpret the statements as a possibility of an earlier rate hikes by the bank. On the flip side, it should be noted that market attention tended to be drawn towards the US stock markets as the earnings season is on. Also, we would like to see how the US yields would behave, as they too could influence the market's opinion. A possible rise of US yields could provide support for the greenback and vice versa. As for financial releases, after a quiet Monday, we note on Tuesday the release of the consumer confidence for October, as well as the new home sales figure for September. On Wednesday, we get the US durable goods orders growth rate for September, while on Thursday, we note the release of the weekly initial jobless claims figure, and we highlight the release of the US GDP rate advance for Q3 on an annualized basis, which could create considerable volatility for the markets. Finally, on Friday, we get the consumption rate for September, as well as the final University of Michigan consumer sentiment for October. Moving now to the pound, and this would be cables for our chart. Now, there was a clear upward trend line which seems to have been broken just yesterday, most probably, and hence we tend to maintain a bias for a sideways motion, switching from the prior bullish outlook. A bias motion which for the time being we seem to be contained between the 1.3875 resistance line and the 1.3750 support line. Now to the downside we note the 1.36, which created considerable support for the pair over the past 2 weeks. Lower than that, and the lower level noted in our chart would be the 1.3430, which reversed the pair's downward motion around the end of September. Now to the upside, besides the 1.3875, we also note the 1.40 and the 1.4125. Moving now to the pound's fundamentals. Now the pound seems about to end the week slightly high against the USD for a third consecutive week, while it weakened against the euro and CHF. On the monetary front, the pound could be supported by the market's expectations for an earlier tightening of BOE's monetary policy despite the tick down of the headline CPI rate for September. It's characteristic that BOE Governor Bailey last Sunday stated that monetary policy cannot solve supply-side problems, but it will have to act and must do so if we see a risk, particularly to medium-term inflation and to medium-term inflation expectations. Now, we tend to maintain some reserves about the possibility of BOE hiking rates in the coming meeting next month. On a fundamental level, we note the continuation of supply shortages, and the energy crunch in the UK is substantial, while at the same time we also note the rise of coronavirus cases in the UK. It should be noted that despite some ideas among scientists for renewed measures, the UK government has ruled out the possibility of new lockdown measures, at least for now. Also, any tensions in the relationships of the UK with the EU over Brexit's Northern Ireland Protocol could weigh on the pound. On the fiscal front, we note the planned speech of the Chancellor of the Exchequers on Tuesday, where Mr. Sunak is expected to provide a semi-annual update on public finances and economic outlook. Overall, we expect fundamentals to take the lead in guiding the pound, as only a few high-impact financial releases from the UK are expected next week. Nevertheless, we would like to note on Tuesday the release of the CBI distributive trades also for October, which could gain on attendance given also that the retail sales growth rate of the UK missed its target today, an indicator which could also provide more clues about the UK's retail sector. On Thursday, we get the nationwide house price index also for October. Moving now to JPY, and this would be USDJPYs for our chart. Now, USDJPY seems to have practically halted the upward motion, and for the time being we see it moving in a sideways motion between the 113.70 support line and to the upside the 114.55 resistance line. Higher than that, we would also note the 115.20 and the 116.20. To the downside, besides 113.70, we would also note the 112.90 and even lower the 112.25. Moving now to JPY's fundamentals. Now, JPY's 6-week losing streak against the USD seems to be halted currently, yet the situation remains fluid. In JPY's fundamentals, we cannot miss out on the Japanese political scene, which is still fluid, and elections are scheduled for the 31st of October. On the other hand, the tensions in the relationships of Japan with China and Russia seem to be escalating as Chinese and Russian military ships sail through the Japan Straits. On a more economic level, we tend to maintain our words for the Japanese economy given the shortage of semiconductor chips, which the country's key industrial sector badly needs. The necessity for the creation of the role of an economic security minister by Prime Minister Kishida could exactly highlight the sensitivity of the Japanese economy to a wide degree of threats. On the monetary front, we highlight the release of BOJ's interest rate decision on Thursday's Asian session. The bank is widely expected to remain on hold at minus 0.10%, and currently JPY/ORS imply a probability of 96.32% for such a scenario to materialize. Now, besides the interest rate decision as such, we also expect the bank to maintain a dovish tone, given the uncertainty surrounding the Japanese economy at the moment. It's characteristic that BOJ officials over the past 2 weeks made no effort to conceal their dovish inclinations. As for financial releases, we note on Friday the release of Tokyo CPI rates for October, Japan's employment data for September, and the preliminary industrial output growth rate for September as well. Moving now to the common currency, and this would be EURUSDs for our chart. Now, the pair seems to be moving upwards in the past few meetings and has stabilized. We tend to maintain practically a bias for a sideways motion as the downward motion has been broken. Moving now to the fundamentals of the common currency. On Euro seems to continue to gain against the USD for a second week in a row. It should be noted that the common currency is losing ground against the GBP and CHF, which could imply that EURUSD's rise is more a matter of USD weakness rather than Euro strength. On the monetary front, ECB's interest rate decision is expected to provide new clues regarding the bank's intentions. Now, currently, the bank is widely expected to remain on hold, keeping the deposit rate at minus 0.50% and the refinancing rate at 0%. BUBA President Weidmann's resignation currently signals that the ECB hawks are at minus 1. Yet the gravity of his opinions may still be substantial at the meeting. Overall, though, we tend to expect the bank to maintain a more balanced, yet still rather dovish tone, and if so, could weaken the euro. Also, we would highlight the press conference of ECB President Lagarde, which is to follow the release and could also create considerable volatility for euro pairs. On euro's fundamentals, we highlight gas supplies as a main fundamental issue. In recent headlines, it seems that Russia did not actually show interest in increasing its gas supplies to Europe, despite some hints in Russian President Putin's recent comments to the contrary. Now, should the energy crunch be extended, we may see the economic recovery of the area slowing, as could also intensify inflationary pressures in the area. Hence, we would highlight the release of October's preliminary HICP rates for Germany on Thursday and for France and the Eurozone on Friday. Prior to that, we would note the release of Germany's IFO indicators for October on Monday, while on Friday we highlight the release of the preliminary GDP rates for Q3 of Germany, France and the Eurozone, which could also create volatility for euro pairs. Moving now to the Aussie, and this would be AUDUSDs for our chart, with a clear upward trend line guiding the pair, as it has practically tested the 0.7475 support line, even breached it for a short period. Nevertheless, the pair floated above it, and as long as it remains above the upward trend line, we tend to maintain our bullish outlook. To the upside, we note the 0.7540, higher than that the 0.76, and even higher the 0.7675. To the downside, we have the 0.7475, lower than that the 0.7420, which used to be a resistance level, now has been turned into support, and lower than that would be the 0.7345. Moving now to the Aussie's fundamentals. Now, AUD continues to strengthen against the USD for a fourth consecutive week, despite some weakening on Thursday. High commodity currencies, in combination with a positive market sentiment, tended to support the AUD in the past days. Also, rising Australian yields could have created some support for the Aussie. Some analysts tend to note that there may also be market expectations for RBA to start finally tightening its monetary policy, speculating for earlier rate hikes than the bank's statement for the earliest rate hikes being placed in 2024. However, we would like to advise caution for this scenario. It's characteristic that RBA Governor Lowe stated yesterday that inflationary pressures are transitory and effectively pushed back against earlier rate hikes. On a fundamental level, we note the easing of the COVID-related restrictions, and Melbourne is about to exit lockdown. On the worrying side, Victoria's cases are reported to have jumped. On the second note, we maintain our worries regarding the possibility of an escalation in the tensions of the US-Sino relationships and the Sino-Australian relationships, which could have an adverse effect on AUD. As for financial releases, we highlight the release of Australia's CPI rates for Q3 on Wednesday. Should the rate accelerate further, we may see the pressure on RBA to start tightening its monetary policy, increasing despite the recent soft employment data for September, thus creating some support for AUD. We would also note the release of the final retail sales growth rate for September on Friday. Moving now to the Canadian dollar, and this would be USDCAD for our chart. Now there was a clear downward trend line which seems to have been broken. That was yesterday, and hence we have to switch our bearish outlook for the pair in favor of a bias for a sideways motion initially. However, should the pair break below the 1.2330, which is our first support line, we may start considering the bearish outlook once again, maybe even if it touches the 1.2250. To the downside, we also note the 1.2160. To the upside, we have the 1.2425, even higher the 1.25, and even higher the 1.2580. Moving now to CAD's fundamentals. Now also the loonie is about to end the week stronger against the greenback. Fundamentally, the loonie gets support from higher oil prices, as well as the positive market sentiment which dominated the markets yesterday. Oil prices continue to rise, stoked by expectations for stronger demand and a surprise drawdown reported Wednesday by EIA regarding last week's US oil inventories. Now, fundamentally, we expect the possibility of higher oil prices to continue to support the CAD. On the other hand, the higher than expected CPI rates for September released on Wednesday confirmed the inflationary pressures in the Canadian economy, increasing the pressure on the BOC to tighten its monetary policy. Now, BOC is to release its interest rate decision on Wednesday's American session, and is widely expected to maintain its rate unchanged at 0.25 currently. Overall, we may see the bank maintaining its confidence, especially given the inflationary pressures in the Canadian economy, which could translate into a hawkish tone. After the release, please note the scheduled press conference of BOC Governor Tiff Macklem to discuss the bank's monetary policy. As for financial releases, we note the release of Canada's GDP rate for August on Friday, as well as the producer prices for September at the same time. That should sum it up for the day. However, before we leave you, now as a general comment, we would like to note that volatility in the markets is expected to be maintained, as there are ample of high impact financial releases. Now, we expect the USD to also maintain the initiative over other currencies. But given that there are also high impact releases and events stemming outside the US, we may see other currencies grabbing the market's attention from time to time. As for US stock markets, better than expected figures tended to attract attention, creating a positive market mood in a more risk-on fashion that may have caused the USD some safe haven outflows. We may see the case for the earnings season to continue to interest investors in the coming week, given that high-profile companies such as Facebook and Apple are due to release their earnings reports for Q3. Also, for US stock markets, we tend to keep our worries for a possible ripple effect, which the situation with the Chinese property market may have. On the other hand, gold's prices tended to rise for the past few days, benefiting from the weakening USD, yet gold's upward movement seems to be somewhat capped, prevented possibly by higher US yields, which pose an attractive alternative, and which should also be watched out for in the coming week. Thank you very much for watching, and from all of us here at IronFX, best wishes for solid trading.